Is Trump crashing the markets on purpose? Confirmed bear market, CPI, and PPI. That's what we're going to talk about in this weekly Outlook video. We're going to try to do every weekend on Sunday evening. Welcome back to the channel. If you haven't subscribed already, I'd appreciate it if you do hit that subscribe button for me. Hit like, turn on notifications, and don't forget to join the free Discord. Link is in the description down below. Let's get into the charts and let's talk about these things here. First, let's take a look at our weekly outlook. It's going to be a busy week again with the data. Starting off with not too much going on Monday and Tuesday, other than some Fed members speaking. Wednesday, however, we have FOMC meeting minutes down here, 2 p.m. Wednesday evening, afternoon. This usually can move markets one way or the other. We have some mortgage rate data coming out as well. That's going to be important also, and I'll touch on why in a few minutes. Thursday, we have CPI data, inflation data. Here's what's key about this. We're still expecting movement to the downside with inflation. Now, with tariffs going into effect just recently, we're not going to see the effects of the recent reciprocal tariffs, but other tariffs have been applied already. Canada, Mexico. We may see some of that impact our inflation data here. Now, this is going to be really, really important. We just had a pretty decent movement to the downside in the markets Wednesday, Thursday, Friday. If we miss on inflation data and we get a spike in inflation, even if it's not a huge spike, I'm predicting that we're going to get even more downside because then the worry is going to be that inflation is going to spike because of the tariffs that have already been put into place, and then the reciprocal tariffs, which we will not see data for until the next month or two. So if we get a spike this month in inflation and we miss here to the upside, that might stir up even more fear in the markets to push them even further down. Now, if we meet expectations or inflation comes in even lower than expected, maybe from where we are right now, we might get a little bit of a rally. Maybe. I'm expecting some sideways trading this week because of everything that's coming out here. So Thursday, CPI data, core CPI data, along with balance sheets for the Fed, budget balance, things like that. These are minimal. 30-year bond auction, that might have a little bit of an impact there. And then we get our normal initial and continued jobless claims, okay, which really haven't been moving much for quite some time now. We've been coming in at expectations. If those numbers start to deviate with large increments, then we might see some issues there also. Friday, PPI data, okay, PPI data. Now here we're actually expecting a little bump up from last month. It's a good thing that we're expecting that, because if we do get it, it's already built in. It's at expectations. Just hopefully it's not much more than what we're already expecting, right? Some more Michigan 1-year and 5-year inflation expectations and Michigan consumer expectations. These right now, okay, because of where we're sitting, okay, with the current state of things, this is going to be important. It is going to be very important to see what expectations of inflation and consumer sentiment are. It's going to be huge because if we start to push expectations to the upside, that's very bad signal. Very bad signal. If we can keep expectations low or where they are, then we are buying time. But if expectations start to change and they start to change to the high side, in other words, if people start to expect inflation to go up, it's usually a sign that inflation is going to go up. Okay. And consumer sentiment, these things here are going to be big on Friday. They're going to be big on Friday. Okay. Um, and then that's really about it. So another busy week for data. And I'm sure there's going to be all kinds of talk about the tariffs, reciprocal tariffs, who's coming to the table to talk. Has anything been done over the weekend? Are we going to, keep these tariffs? That's where we're at right now. Is there's just such high, a high degree of uncertainty right now, even though we know what the tariffs are, that the market is crashing. Okay. Now, we've entered into, let me switch over to where you can see this chart a little bit better. We've entered into bear market territory, and we pushed down into it pretty far. I mean, pretty solidly, pretty strongly here. This is a very strong daily candle right into bear market territory. You can see this line here. This marks the 20% negative from all-time highs. Okay, and the 20% mark is what defines bear market territory from correction territory. So we have pushed into bear market territory. Now the question is, do we stay in bear market territory? Do we get a bounce here? Do we get a rally out of bear market territory? Do we consolidate just below? Lots of different things that can happen here, right? And really it's going to depend on the data that comes out this week, the news that comes out this week for tariffs. It's going to depend on a lot of things, and really we're only a few data points away from continuing our fall in the market. Now, there are all kinds of speculation and ideas, finger pointing, name calling, whatever, about what's going on right now with tariffs, with the market, with the economy. I don't pretend to know much about any of this stuff, but I do some research, and I like to look at all kinds of opinions and then formulate my own opinion. We have a few different things that could be happening here, right? We could just have a president who is trying to ruin the country, trying to destroy the economy, trying to destroy the world economy. That's one point of view. We may have a president who is trying to do the right thing, but has very foolish ideas. And the tariffs, many have said, are very foolish and are going to do bad things. That's another point of view. A lot of the economists around the world are saying that these tariffs, if kept in place, are going to push the world economy into recession. And then there's a few that are saying that this is a good thing, that drastic change needs to happen in order to bring things back down to the way they used to be years ago. In order to change how trade is working, in order to make it fair trade again across the world, free trade across the world. And then there's a very, very select few that are making a good point that maybe this is all being done on purpose. For good reasons or for bad reasons? Well, I'll leave that up to you guys to decide. But what I've read and what I've looked into actually makes a little bit of sense to me. That Trump may be trying to tank the markets on purpose. And the reason for that is the 10-year treasury. Now, we've had a pretty good run down here. This was Wednesday, where Trump made his announcements for the reciprocal tariffs. You can see here where we actually started the day off pretty green. The day actually rallied all day before the announcement. And even during the announcement, when he started, the market continued to move upwards. I went live during this. You guys can watch the whole live stream with the chart. Okay. As soon as he pulled his chart out, and with all the tariffs labeled on it, the market it literally gave everything back. I think we moved just under 1,000 points in less than 20 minutes. The next day we continued, and then Friday you can see how the market just crashed. And one of the biggest reasons here was China actually stated that they were going to hit back with more reciprocal tariffs against us. And then obviously that pushed the market even further down into bear market territory, where we actually closed Friday. Now, why do you think that maybe he is doing this on purpose? Why would Trump be trying to crash the markets on purpose? Well, there's a few different reasons why. The one that I kind of like and makes sense to me is to crash the 10-year treasury yield, which has been following the market. It has been crashing. Okay. We're down below 4% now. Now, why would he want to do that? A couple different reasons. Mortgage rates also follow the 10-year treasury. And because the 10-year treasury is coming down, mortgage rates are coming down. Even though the Fed hasn't cut Fed rate, because the 10-year treasury is coming down, mortgage rates are coming down. That's a really good thing. That's one of the things that people have been complaining about for, I'm sure, the past like 2 years now, right? So that's one reason. Another reason is, let's hop back over to this screen here. The total outstanding debt for the United States is $36.2 trillion here, okay? This year, 2025, the United States has to refinance 9.2 trillion of that. It's over 25% of our total debt, because these notes are maturing. So how do we refinance our debt? Well, one of the ways is by issuing new treasury securities like bonds, notes, and bills, and replacing the maturing ones, which are coming to maturity this year, over 25% of our total debt. Now, if you tank the markets, which tanks the 10-year yield, you're now refinancing all of that at a lower rate. Where we stand right now at 3.9%, we came down from 4.4%. And actually, we can show you the chart here real quick. You can see the 10 years tanking with the market. And if we continue to go lower, it's going to be even better than this. But we're currently saving about, I think it was 42 or 46 billion dollars just in the refinance, right? Just in refinancing our $9.2 trillion in debt that's maturing this year. So if you save all that money, where does it go? Back into the economy, hopefully from the government, right? But that's pretty big, and it's pretty smart. Yes, it's causing some pain, and the markets usually overreact to things anyway, which is why some smart people out there are calling for a rally coming soon. So if you think about it, we either have a really, really dumb president or a really smart one. And yeah, it may not be the way everybody may like, but it may be what everybody needs. Think about that. Sit with it, think about it, let me know what you think. But maybe, just maybe, all of this is being done on purpose so that we can give opportunities in the market, because this is opportunity. When the markets crash, it's not necessarily a bad thing. It's opportunity. Investors, true investors, aren't going to be worried that the markets are coming down, especially if they knew what they were doing before this happened. But they're going to be saying, "Oh, the buy time is coming." So this is when people's wealth is made. When the markets come down, especially a significant amount, that's when you make your money. And any investor that's been around for a long period of time will tell you that. So we tank the markets, we tank the 10-year treasury, we bring mortgage rates down. Hopefully, that will get people to sell and add some uh, supply into housing, and people start buying. And at the same time, the United States is able to refinance a quarter of its overall debt at a much lower rate, saving billions and billions of dollars. I don't know. You tell me what you guys think. Do some research. Hit me up in the comments of this video and tell me what you guys think. I know this is a hot topic, obviously, because people are struggling. And, people like you and me, I'm in a very, very, low middle class position. I'm a paramedic. Okay. I don't make much money. I work nights and I'm trying to become a day trader so that I can get out of this life. Okay. So I get it. I feel it. I'm with you guys. I'm here with you guys. I feel the pain. I get it. And I'm a one income household with two children. My wife stays home, and that's how I want it to be. Um, but I get it. Okay. Things are really, really tight, and it doesn't feel like it's getting any better. But if you take a step back and look at the bigger picture and look into the future a little bit, if this works, and I'm not saying it will, I don't really know, to be honest with you. But if it does, we go through a few months of pain and suffering, a few more months of pain and suffering, because we've been suffering for the past 4 years. And then maybe we come out on the other side of this even better off. Every time we have a large pullback in the market, a recession, something to that effect, we always get a boom afterwards. Always. And we can pull charts up to see that. The market just continuously goes up. We do have these pullbacks. Sometimes it's 20, 30, 40%. But afterwards, it soars and the economy gets a big boost. So, just something to think about in our little weekly outlook here. Is this all being done on purpose? Is this all a master plan to set us up for an economic boom down the road, for wealth, for housing, for interest rates, for global success, to put the US back on top. The optimist in me says, I like that plan. I'll take it in the butt a little bit longer just so that we can be better off down the road. So, fingers crossed. I like this idea. I'm not saying that it's true or not, right? I have no idea. I have no idea what the plan is, right? I'm not sitting in the Oval Office. But I like to look at all kinds of different ideas. And for the most part, most people are just talking about how this is going to destroy everything. And that's not even an idea. That's not an explanation. It's not anything other than they're just throwing fear out there. Until I came across one or two articles where some people are like, hey, maybe, maybe this is what they're doing because this makes sense. And it does make sense. You can see it on the charts, right? You can see the 10 years crashing and you can see mortgage rates were dropping on Friday. Those are all facts. So if that's actually what's happening here, and if that was the plan, hey, I'm here for it. If it wasn't the plan, but that's what we get out of it, and then we still come out better off on the other side of all of this, well, hey, happy accident. But I tell you what, whether you like Donald Trump or not, he is a very, very successful person. And it doesn't really matter how he did it or what. The fact of the matter is that he did it and still does it. And so to get somebody in office that's going to do things, run this country like a business, I'm more inclined to say that he knows what he's doing versus that he's just an idiot. His track record with his own businesses prove otherwise. And that's just a fact. It doesn't even matter if you like him or not. He is a very, very successful person. Kind of knows what he's doing. And if he's going to run this country like he's been running his businesses, financially at least, hey, I'm here for it. I'm here for it. So anyway, there's our weekly outlook. Bunch of things to think about. Again, let me know what you think about that idea. Is this being done on purpose? And is it being done on purpose to get us through the pain and come out the other side better off? Let me know what you think about that. I would love to hear all of your comments. Put them in there. I don't care what your opinion is. It makes no difference to me, but I like to hear and see everybody's opinion. So put them in the comments. Let me know what you think. Is Donald Trump tanking the market on purpose? And then if you do think so, tell me why. Tell me why. Um, yeah. So anyway, there's your weekly outlook. We have CPI data, PPI data coming out. We also have the FOMC minutes that are coming out on Wednesday as well. I don't know if I missed that. And then bear market territory. Do we stay in bear market territory this week, or do we get a little rally back out of it and then stay above it for now? What do you guys think is going to happen? Also, let me know in the comments down below what you guys think there. Are we in bear market territory now for a little while? Are we going to get a recession? Are we staying here? How much further do you think we're headed down in the market? Or do you think we're going to get a rally outside back into correction territory and then we stay there until we get some more data um, and then rally from there? We're down over, well, let's see how much we're down right now. We closed 23.1%. is where we closed on Friday. So the market has pulled back 23.1% from its all-time high. It's not a bad pullback. How much more do we have? Are we going 30? Are we going 40, 45? What do you guys think? Let me know. Thanks for joining. I hope you guys enjoyed this video. I hope you got a little something out of it. I hope there was a different idea from what you've all been hearing out there over the weekend. Maybe it's just something to think about. Do some research on your own. Don't just listen to what you hear out there. Do some research and then let me know what you guys think in the comments down below. I appreciate every single one of you. Thank you to all my subscribers. Thank you so much. I appreciate all of you. Thanks for watching. Thanks for subscribing. If you haven't subscribed yet, do me a favor, hit that subscribe button, like, comment, and share, turn on notifications. I come on here live every single day that the market is open, recap videos, and then every Sunday, I'm going to try to come on here and do a weekly outlook and talk about what the current state is of the market, and we go from there. Thank you guys for watching. I appreciate all of you. I'll see you tomorrow morning for our next live session. Have a good weekend.